The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618.
We are going to be having our guest today as Norm Winsky will be on at 9:30. Tomorrow we're going to have Tom Hugard on at 9, little after 9, and then at 9:30 we're going to have Tim Bost. Those will be the guests that we're having on. Now, the first chart that I posted here today, as usual, is the German DAX. And as you can see, it's continued the downtrend over the last 3 days or so. And it's pretty, look how beautiful it is, folks. Just an absolute perfect ABCD pattern. And here again, they don't always work, but when they do, you know, they work extremely well. And they're not for prediction, they're for risk control. That's the key to keep in mind as you're looking at these patterns each day. Now, I want to bring up the FTSE next because it is also under pressure, which means there's a little pressure everywhere. I won't complete that sentence. Okay, here we go. You'll see the FTSE here. I've never traded the FTSE, but there are folks that work with us that do, so I always bring this up to take a look at it. But you can see the beautiful patterns that are there. That's just really, really nice. And that's why technical analysis is so fun, because of the repetition that you get. And that's it. If these markets were truly random, folks, none of these charts would look alike. They would all be choppy and, you know, whatever, but that's the way it looked like. I want to spend just a second here talking about the flu epidemic. I've been to Wuhan, China, probably 4 or 5 times over the past, I haven't been for the last 15 years, but the last 14 years, but for 20 years, I was there probably 4 or 5 times. It's a city of 11 million people, and it's been quarantined. Nobody in or out till February the 29th. That's a scary thought, folks. I don't know what the heck it means, and I'm not sure if the news is being reported as accurate, but it's a scary thought. And also, we have tomorrow will be the start of the Chinese New Year. Gong Hei Fat Choi, Lei Si Dao Loi. That means Happy New Year and best of luck. I think that's what it means. Anyway, yeah, that's it. I was thinking of that same movie today, David, the Abdominal Strain. That was really to see if it's going to be what's going to be happening. So we'll see. But stop and think, folks. There was a possibility of 300 million people traveling over this holiday. But Beijing is putting the clamps on that. So there must be concern here. But again, you know, we heard about the hog thing, and who knows whether that was true or not. Our hogs dropped in price by half. So let the charts tell you what they're doing. That's all I can tell you. That's what we're watching. Okay, let's move on here and talk just about a couple of charts that need our attention. I did want to bring to your attention the chart. Hold it. Where can I find it? Right up here. Oh, here's where we are, I believe. Yes, here's that British pound chart that continues to work. This was the Palladium. Oh, dear. Ruby, I'll be happy to look at Palladium for you because I don't know too much about it, but all I know is it's been going straight up. Give me a second here to pull up the old Palladium chart here, and we will, only takes me a second here to do it. And Ruby, you're special, so everybody's special, but Ruby is super special. Uh-oh, did something wrong there. Hold on just a second here. Okay, PA is Palladium, and we hit 2,400 yet? Well, we did, 2,450. Shut the front door and raise the rent. My goodness, my goodness. It sold off a little bit since then. Let's bring this up here so we can take a look at it together. Boy, this is one heck of a move, folks. Do you know that Palladium about 20 years ago was selling for $25 an ounce? And now look at it. It hit today, the high was 24.27. It's already dropped $100 today. Let's look at intraday just to see if we see anything there. Well, it had a pretty nice little low risk sell. Let's just take a look at this. Very, very. Thank you, Ruby. This is the kind of thing that I really like to look at. Look at this. Look at this move here. You'll notice the three lower. You see the lower tops there. That last one was the important one. We went from 2370 up to 2400, and then it dropped $100. So that's a very low risk. So once you sell that on a stop, and that's what's happened with crude oil, folks. For the last 3 days, crude oil has just been falling out of bed by breaking these numbers, and that'll happen in the stock market. It's not maybe in my lifetime, but sometime it might. So that's what it looks like. Now, what I would do today, I'd be watching Palladium to see if you get a little rally back up here to around the 23.55 level, and I would take a quick look at that as a potential short sale. The problem with this. I've never traded this, folks. I've heard that the spreads sometimes can be pretty violent, but I haven't seen that. But that's just a chart. I don't want to get into that. Let me. Someone else have another question. Oh, we got a Mr. Z. Would it be Mr. Z? What can I do for you, my friend? Happy Chinese New Year to you.
Yeah, and New Year to you, Larry. Thanks for taking the call.
You bet, buddy. What can I help you with?
I wanted to ask traders' position handling question of you on the dollar yen, the USJY cross pair. But before I do, I should first tell your listeners kudos to you. In real time yesterday, Wednesday, you pointed out why March Chicago wheat was a low-risk short at 490. A completion of a ABCD rally pattern right up against a weekly chart swing high from back in 2018, and that contract fell 4% right from the time you mentioned. So kudos to you on that.
Well, don't confuse lucky with smart. That's all what my grandma used to tell me. So, yeah, once in a while you pick up pick up an acorn or two. What do you want to talk about today, my friend?
That Japanese, the dollar Japanese yen, USJY.
Yeah.
We both know, well, anybody who looks at the charts saw it was an obvious low-risk short beginning of this week and late last week up at 110. It was merely a completing pattern against a declining trend line going back on the weekly chart for 5 years. My question now is, as a trader, say you're short, which I am, by the way, say you're short and it's drifting down, it's nothing big. The question is, how do we know in advance if it's going to decline big or just mild? And if we don't know, how do we handle the trade, at least for you, if we're looking to hopefully benefit if it does drop big rather than just drop shallow?
I'll cover that when we get back from our break. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and we were talking with Mr. Z about the Japanese yen. And Z, what I'm looking at here is a market that's gone up and made new highs out of a breakout area, and it's just gone nowhere. And John, you and I know that's the risk-on trade, and it didn't. It didn't go with what the market was doing. This thing should be trading above a 111, in my opinion. Given what the stock market did. We shattered all records, and we should have been much, much higher. That's telling me that there's problems with that cross rate, and that's why I sold it there at that 110.05 level. And I don't have to risk very much, about $200 to see if I'm right or not. But that's how I look at it. I mean, it's just not reacting to the news the way it should. And when you look at it in relationship to the gold, you can see the gold is in the same situation. It's not reacting either. So that's why I risk it there. Now, you asked the question is, how will I know, when the trend has started? It will be the day after. So I'll let you know just as soon, because we don't know whether these things, that's one thing you don't know for sure, what it's going to be. But the key for me is if it works, you're going to see a big move in that yen, and that'll tell you that you're either right or wrong. When you see that, then you'll know you'll be pretty close to where you want to be.
Well, I just
hope that helps.
I failed again, but I'm going to keep trying, Larry. You know me. I'm going to keep trying to get you to divulge your secrets, but I failed to get you to do so today. So good for you. You held them back, so we'll just hold them short. Just in closing, I just wanted to mention to you on the gold market, we've got the Chinese New Year. I believe the actual New Year holiday is Saturday, but
yes.
There's
no, it's Friday. Friday. It's Friday is the Chinese New Year.
Very good. What I wanted to mention, just regarding the gold market, in October, which is typically the timing of China's Golden Week celebration, and at end of January into early February, when China has this New Year's related holiday, oftentimes we get a seasonal selling attack in gold. You can just look at your charts and see from September highs and January highs, oftentimes gold undergoes a selling attack. What's actually going on there, I don't care to speculate here, but that is just an observation you can see on the charts and the calendar, so I just share that with you.
That's very good. John, you're right about Saturday because, I'm going to explain something to you that you might find good. This is astrological. The sun goes down in the west. So that means it comes up in the east, so it's going to be Saturday when it's our Friday over there. So it is Saturday over there. Our full moon is on Friday. Theirs is on Saturday, and it's a lunar holiday, of course. The Japanese calendar is based on that. So you are correct. It is Saturday for them, Friday for us. So that's what what we'll be watching for sure.
We'll keep our fingers crossed on that short USJY trade. Thanks,
John.
Larry.
I'm glad you understand the fact that I cannot share the secrets that I have. They've been entrusted to me by the Egyptians. So.
Very good. All right. We'll look forward to your guest interview. Thanks again.
You bet. Yes. Thanks a lot, John. Folks, there are no secrets in these things. It's just basically hard work and discipline and trying to, put your risk control into effect. And that's what the patterns try to do. When patterns fail, that's telling you that something is going to be really, really important. Regarding the wheat yesterday, all I was looking at was the fact that the market was trading at around 590. And, my goodness, there were no buy stops there. The market was not, and it was completing the ABCD pattern, for heaven's sakes. That's why it looks so interesting. There was nothing really, really mysterious about it. It was just the amount of risk control that you were looking at to see if you were going to be right. That's really all it's about. Here, let's just go back and review this. Let's just take a look here. Here's Tesla the other day, last week. Yeah, crystal. Yeah. My crystal ball's got a lot of fog in it, Marshall. Okay. We'll talk about crude oil in just a second, Maria. Remember the 540 level in the crude? And it backed off $50. It dropped $50 in one day. And what did it do? It turned $50 into $75 higher. So that's pretty much it. So that's what we're looking at. Let's talk about crude oil. We've been talking about crude oil, folks, being so bearish. It's just a matter of, let's bring up the chart again. I think it would be the easiest thing to look at if we just get a second here. Oh, here we go. Just give me a second to take a look at this oil. Where are you? Crude, here we are. Yeah, we talked about this every single day, the importance of this level here at 57. Remember that 786? Remember we talked about that little tiny 3-day rally. Look at that, folks. That's not even a rally at all. It's almost as if the market is closed. It only rallied $1.40 a barrel. And look at that. Bada bing, bada boom. We're trading below the November lows now, folks. This is going to be this is Custer's last stand here at $55 a barrel. We'll take $55 a barrel out because there are going to be stops there. The last of the longs will be getting stopped out there. So right around $55 a barrel, there should be a little bit of support, but I would have to do it intraday on a 15-minute chart to quantify the risk, but that's what I would be watching on that. But it's been bearish for quite some time, and we saw the same thing in the heating oil. This is what we talked about here at TFNN almost every day this week. Yes, Marshall, you're absolutely correct. That is a 135 on the weekly yen chart, and it's a very nice one too. It's very symmetrical. And we owe that to our good friends, Roy Longstreet and his son Bill, both who have passed away. So we'll try to move on to carry some other things that we have through here. Tom Hugard will be on Friday to talk to us about his position that he put on in the short Dow Jones the other day based on that pattern that was going on in Boeing. If you remember, we put that pattern up to let you folks look at it because it was so pretty. And not only that, it had a beautiful head and shoulders pattern and everything was lined up. So that's why it looks so good. And then we'll be looking at, oh dear, here's one we should show. Let's see if we can get this up here. This is, here's the update that we did yesterday. Let's get this up here so you can see it. This was in the crude oil. Let's get this up here. This is the video that I sent out, that once we went below 57, it was going to be extremely bearish. And, we're looking for this level to come down. You see, we're trading at $55 a barrel now, below 55. So the last, Custer's last stand is going to be at $54 a barrel. And then you're going to come down in. We're going to hit 4 lows, folks, at $50 a barrel, going back to June. Below that, there's trouble in River City if that happens. Who knows? That's it. That Texas tea, I always loved that. The Beverly Hillbillies. I never missed that show when it was on. I just really enjoyed it very, very much. In fact, I don't know if you folks know this or not, but Burt Ward, who played Robin, he was, well, let's get it. 877-927-6648.
Larry Pesavento has just announced a special 90-minute live webinar taking place this month for subscribers to his Fibonacci 24/7 trading service. On January 29th from 4 till 5:30 p.m., Larry will be covering how to read supply and demand and how, in combination with his trademark ABCD patterns, you can control risk and maximize profit in today's algo-dominated markets. In this live 90-minute webinar, Larry will cover a hidden in plain sight trend change pattern that gives you early entry into the trend, how to find and update the key harmonic numbers to trade against in futures, forex, and stocks, how to translate 3 go-to patterns into supply and demand, and how to use them for entries, the continued importance of the opening price in 2020, and how to use the time of day when taking a position and for entry into longer trends. Sign up now by clicking on the newsletter tab on the front page of TFNN.com and select Fibonacci 24/7. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're back, and we have Norm Winsky from Astro Trends on. Norm, the microphone is yours.
Thank you, Larry. I thought we'd quickly review what we had last time when I was on your show on January the 9th, just ahead of the huge mega cluster of events there, including the full moon lunar eclipse and the outer planets and a whole bunch of stuff getting together. They said we went back and found that there was nothing like this, only every few hundred years, and they don't expect anything like this again until 2080 is my understanding, and I think probably by then, you, Larry, you and I will be retired by 2080. What do you think?
On that, yeah, that's probably correct.
There you
I'll
go.
be retired long before that, but go ahead, my friend.
There
Continue.
you go. So anyway, so here's you might want to take a screenshot of all this long list of stuff that's all happening within a few days, and then I'm going to review the charts quickly. Okay. So we had Saturn, it's a bunch of stuff to the U. I use the U.S. natal chart. Also use the stuff in the sky, heliocentric from the point of view of the sun, and geocentric from the point of view of the Earth. And we had this huge list of stuff there, including a full moon lunar eclipse the afternoon of the 10th. They're 9th, 10th, and into that weekend, over that weekend. So I'm going to go in roughly alphabetical order. Here's the cattle. We had one of the big things we had was, it's one of my top things. When the planets go do the relative motion of the Earth, when they stop their motion, how it appears from here on Earth, and then they turn to go retrograde or direct. And Uranus did that in the sign of Taurus over the weekend there at Taurus the Bull. And guess what? Cattle is connected to the sign of Taurus the Bull, and look what happened. That was a pretty nice top we had there on the over the weekend of the 10th, right there. If you sold it on the opening on Monday the 10th, you had yourself a nice trade. Your trend was up, you're going up, and we look for trend reversals about 75% of the time when this is working right. It doesn't always work right, as you'll see on the next chart. I had a couple of points here between the 9th and the 10th. For the cocoa, and the cocoa didn't care. It just kept on going. So there you go. Sometimes it doesn't work. The beautiful thing about this system is you have both a price and a time parameter, sir. And if it it takes too long to get going in the way you want, or the price gets broken, you can make a little box here around this time parameters. You box your time in there, and if it takes out that price, you get out, cut your losses. Here's coffee. Coffee also did not care, so every now and then I get a bad streak here. And there we go. The coffee didn't care about. There's my 2 points there for the coffee with the red arrows. Copper kind of in the middle there. I don't know if they would have even done that. It was kind of going sideways up until that point. And so it's kind of hard to tell what to do. And then it broke out to the upside. We're getting better here with some of these other markets. Corn was near the top there with the green arrow on the full moon lunar eclipse. You know, the greens love the moon. And there you go. You're near the top there on the corn. There's cotton. It's beautiful. It's a astro cousin to the cattle. And look at that. It doesn't get much better than that. You would have been selling on the opening with Uranus going direct in Taurus the Bull. And you would have been selling on the Monday's opening there on the 13th. And that was pretty much the high of the month. Okay, here's your gold. I had a little bit of a rally into the moon, and there's a little bit of a short-term top there on the gold. Here's hogs. I added some extra stuff here to show you some techniques you can use to help. I like simple channels, trend lines channels, and you can see there on the hogs are going down, down, down into our points there for the hogs. It's Pluto, both cocoa and the hogs come under Pluto and Scorpio. And we had Saturn line up with Pluto there, so we'll look at those markets. Here's hogs looking for a trough. There we have the 2 points here, and you're getting close to the bottom here on the hogs, you know. And then we're looking, there you go. So if you draw a little trend line there, and you hit the bottom of the thing there, and if you accelerate your trend line across those tops, if you want to be more conservative and wait, then you can wait till it breaks that little trend line there, and then you know the market's turning up. So you got close to the bottom there on the hogs. Red box means we're not doing anything because we don't like sideways. Newton's law, for every action, there's an opposite equal reaction. If it's going sideways, you're probably not going to get much of a reaction. Here's soybeans, had a little bit of a rally into the moon, and that was a nice little short-term top there for the beans. There we go. Here's your S&P. All those things apply to the stock market, that laundry list I showed you. And look at all these points here. So it wasn't as spectacular as we thought it was going to be. We just had a couple of short-term swings, had a little top here, had a little bottom there, and then it went up. And once it broke out of the box, then we had a big rally, you know. Here's your T-bonds. Had a big cluster here for the low right there. And then we had another cluster, which it didn't work so well for. Anyway, so you went batted about 50-50 there on the bonds. Wheat was going sideways. I would do nothing there. Here's the dollar, worked out pretty nicely. We had a big cluster there for right around the 10th of the month, and that was a nice little short-term top there for the dollar. And here, now we're going to look at currencies. So for the moon, and there's your moon there for the Aussie dollar, and that was a nice, pretty good short-term top there for the Aussie dollar. There's a nice short-term bottom there for the pound. Here's the Canadian that was going sideways, so I do nothing. Here's your euro, one day just past the low there, nice low there, and still within range of the bottom bar. And there we go. And so now we're going to look ahead. We have, here's what's coming up. Starting this morning, we have a little bit of a cluster here. Jupiter going to line up with the U.S. Sun natal chart. So we look at U.S. stocks, T-bonds, and dollar for a possible change in trend this morning. And then we have a bit of a cluster this weekend with a new moon in Aquarius. So that you round up your usual suspects. We got the financials, grains, precious metals, and because it's in Aquarius, we'll be running a special on copper. Now, so we have more stuff with the U.S. There you have more stuff, stocks, T-bonds, dollar, and more of that too. So there you go. So you already, I think I covered all the charts that are covered under these future events. And let's see. Then we're going to talk about how you can contact me, so forth. I've been doing this a long time, and Larry would like me to tell some old war stories from when I was on the floor. There's my contact information. You want me to start the stories now, Larry?
Yes, sir, please.
Okay, well, I was right out of college. Actually, while I was in college, I stumbled on the opportunity to buy a membership on the we used to have to buy into a membership on an exchange there, and I had the opportunity, stumbled on the opportunity to buy a membership on the then fledgling Chicago Board Options Exchange, which had just opened their doors in the spring of 1973, and about a year later or so, actually in the fall of '74, I stumbled on the opportunity to buy a membership for $25,000, which was actually they were trading it by that time at $45,000. I got the opportunity. The exchange was going to sell some memberships at a discount, and I got on the list there. I was able to buy that, and then right out of college, when I finished my college, is it music time yet?
Yes, it's time for the break. We'll be right back with Norm Winsky of Astro Trend.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Hey, folks, we're back with Norm Winsky, and he's talking to us about some of his experiences at the Chicago Board Options Exchange. You want to continue, Norm?
Yes, sir. So the money that I used to buy the membership and I have for trading capital, part of that was I made while I was in college, trading based on planetary cycles, which I learned from, learning astrology. And then I stumbled on the Donald Bradley book there in a bookstore. I paid, they had it marked 10 cents, but they struck out the dollar. They marked it down to 10 cents. I started studying that and was able to make some nice money during my college years. And I stumbled on the opportunity to buy a membership on this new exchange. And so that got me to Chicago, but right as soon as I finished school. And I was a market maker. I landed there as a market maker. I was actually risking my own money on the floor there. And so age 24, right out of college, I'm a member of market maker on a major exchange. So anyway, I didn't have anybody to help me. I was learning all on my own. As a matter of fact, after a few weeks, I asked my fellow traders, I said, is there some class or something I can go to after the market closes in the afternoon to learn how to be a market maker and do this? That put my fellow traders on the floor laughing hysterically. They thought that was about the funniest thing they ever heard.
Norm, one of our listeners wants to explain to me to them what a market maker is, please.
We literally made the market. When an order came in, you Joe Schmo, put an order in, the buyer, sell an option. Who's going to take the other side of your trade? That's the market maker. We make a bid and an offer. We compete to make a bid and an offer to take the other side of these orders. They say somebody's got to take the other side of your trade.
Was this in futures or was this in stocks?
Options, stock options.
Stock options. Okay, that's what the question was.
I landed there in 1975, right? Mm-hmm. So anyway, I struggled my first year there, made money, gave it back, made money, gave it back. Didn't have a clue about money management. It was, as my fellow traders had told me after I asked them if there was a class, when they composed themselves, they said, no, it's on-the-job trading. You risk your money and you take your licks, and that's how you learn, So anyway, I started to get on a roll. I struggled, and my account got down to like $500. And I started with about $15,000, and I managed to I wrote my account.
That's called a slight drawdown. Is that what that was called?
Yeah, slight drawdown there. I probably had to take out money to pay my rent and so forth. Anyway, I got down to $500, and I was ticked off that I wasn't making any money. And I just said, I got to start making money. And I got we had real good volume the next day, and I was able to scalp about $3,000 a day, and that got me rolling. And then I got on a roll, and I had developed hardly anybody had computers back then. Individuals, you didn't have a computer in the 70s. And so I developed that astrological card file of all the different companies and their different planetary positions. So if a planet landed, look, Jupiter's at 11 degrees Aquarius, whatever, I could look at my card file and see what companies that was energizing. And their various planetary positions. So to fast forward now by the way, I started doing that, got a reputation for great market timing. I'd walk into some trading crowd, GM or whatever it was, and put on a pretty good position, and they noticed that, and all of a sudden the stock would turn, and I was, people got to where I could walk into some crowd, and they were afraid to trade with me. You know, they would make fun of me, of course, because they knew I was trading on the astrology, and they go, about half the floor was from New York, you know, and they go, it's Star Wars, you know, and they make fun of me and so forth. And then they were afraid to, you know, they make fun of me, but then some of these people were afraid to trade with me too, because they were afraid of what I didn't want to take the side of my trades, you know. So anyway, it's a fast forward now. It's 1977. I look at my card file on a weekend, and I go, oh, look at that. The plants are lined up for National Semiconductor. Back then in the 70s, the chip industry was, semiconductors were in their infancy, and if they weren't making any money, it was all about investing for down the road 10, 20 years from then. And so National Semiconductor was one of the leading chip companies. I don't think I ever traded in there before, but I looked at the card file and said, it's time to go into National Semiconductor. So I walked in there on, I think, like Monday, and all of a sudden the crowd was very nervous. I walk in there, and they go, oh, Winsky, what are you doing here? And it's like, I don't know what they're doing. I said, let me put my trade on, and then I'll talk to you, right? And they're all there. And they go. I said, okay. So I bought like 100 lot of calls, on the National Semiconductor. And they're like, okay, now what do you want? A couple of them were bugging me, So now what do you want? They go, oh, well, Goldman Sachs is coming out with their earnings forecast for National Semiconductor maybe later today. I said, oh, I didn't know that. Thanks for telling me. And they go, what do you know? I said, I don't know anything. I was just trading based on the stars, And so later that day, and you got to understand, National Semiconductor was not making any money, and should they break into the black, that would be a huge deal, So later that day, Goldman Sachs says National Semiconductor is going to earn a penny a share. And so then the stock runs, after the Goldman Sachs says they're going to get a penny a share. And then a day or two later, the company comes out with actual earnings, and they say, oh, I forgot to give you the astrological analysis. So I looked at the planets, and the astrological analysis was they were going to have good earnings. The stock would go up. But there was one little rub, and that was that Jupiter was going to make an adverse aspect to their Mercury, which means that's over exuberance. They may exaggerate. That's all my astrological analysis. I said, oh, gee, I can live with that, So I go and buy the calls. The stock, Goldman Sachs comes out with a penny a share. The stock moves up. I'm happy. The move was time frame for that week. End of the week, I'd probably get out. A day or two later, the National Semiconductor comes out, says they made 5 cents a share, 5 times the earnings, 5 times the estimate, and the stock runs. And so then, I go and get out. It's up. My call options are up like $3 on 100 lot. I'm up 30 grand. I get out at the end of the week. But the best part of the story is yet to come, Larry, because then about a month later, the company comes out and says, "Oh, we goofed. Oh, and I got out and crashed out. My about $30,000 profit. So so about a month later, the company comes out and says, "Oh, we made a mistake. We only earned a penny a share." So everything that I had forecasted came true. They had good earnings. They exaggerated their earnings, and I didn't have to I got to keep the money. I didn't have to give the money back. So that's pretty good. Mm-hmm. Any questions or comments or anything?
No, that's great, Norm. This is what we want to hear. You want to tell the folks how they can reach you if they have an inkling?
All right. By the way, I don't trade stocks anymore. Don't trade stocks. It's you can Google it. Why are trading stocks a loser's game? I had to trade stocks back then because we didn't have stock indexes back then. It's a much simpler way to go. All right. Anyway, you can reach me here in sunny Naples, Florida. There's my phone number on the screen there, 239-594-3939, and Winsky at embarkmail.com, or you can Skype me at nwinsky_1. Looking forward. I have free classes to do day trading. Yesterday morning, we had 10:44 astrological time based on the U.S. chart, and that was within 2 ticks and about a minute of the high there at the top yesterday on the S&P. So that worked out pretty well. I'll teach you how we do that in about 30 minutes, and that part of the day trading is free.
Well, thanks for joining us, Norm, and we'll talk to you again.
Thanks a lot. Bye.
And happy Chinese New Year to you, my friend. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I just posted the chart that Tom Hugard gave us the other day. I posted it in the chart room on Tuesday, and as you can see, the market is now sold off 600 points. Tom will be our guest tomorrow at the start of the show to discuss how he went into this trade and what he was looking at. And, of course, you remember that one of the things he was watching was a chart of Boeing, how badly it looked, and we'll post that tomorrow to show you what he was watching and the fact that Boeing is almost 8% of the Dow, and that's what triggered it, in his opinion. And, of course, his opinion was certainly right this time, to the tune of 600 points. So we'll have Tom on to take a quick look at these markets. Now, the euro has broken down. Folks, we have broke below that coveted 106 level. The $64 question is, do we continue down from here or not? We believe that we probably are going to go a little bit lower. We're at pretty key support down at this level of 106, but if that breaks, it's going to be like crude oil breaking 57, dollars a barrel, and that's not a good thing to be looking at. If you remember, folks, fact is, I think we're here right now. Let's just get this up here. Yeah, we're right at that number right about now. You'll see that this is the number we were looking at in the euro. I think we hit that 106. I think we hit spot on. I think and that's a 135 pattern. So if the euro holds here, it's got a real chance. And if it doesn't, it has no chance at all. And, of course, we did the ABCD pattern from September through January. That was a beautiful move. And this would equal the drop that we had between October and December, where we are now. So Pay attention to that. This is going to be real interesting. So tomorrow we have two guests. Have a lot of fun talking to them. Tim Boss will be at 9:30. Tom Hugard will be on at a little bit after 9 o'clock. So live every day in an attitude of gratitude, and may God bless. And I think I have a little dead time in here. Unfortunately, if there's any questions, 877-927-6648. But Al tells me the lines are jammed. You won't be able to get through. So you'll have to hold your calls till tomorrow.